Hey, so I want to look at ASML. Last time we looked at them was June 12th, it looks like, so about a month and a half. Last time we looked at was trading at 7.15. Now it's at about 7.18. They did have their earnings come out quarter two, so uh, the fact that it hasn't really moved that much, and we also note that it was in an uptrend. So the fact that it's been a month and a half and the price really hasn't changed much, potentially a good buy point, but we'll get into that. I guess let's just start with the Q2 earnings, then we'll go into some news, and then we'll wrap up with the technical analysis just to see if now's a good time to buy or what is a good time to buy. So again, starting off with the quarter two results and heading into quarter three. So on the right side here, we have ASML was expecting between 6.5 billion and 7 billion euros in the second quarter. They ended up getting 6.9. That's on the left side here. So they came in within that range, came in on the top half, uh, almost at the very top. They almost beat it. Gross margins 51%. That's kind of why we fell in love with this company. They have gross margins that are 50% or greater. That's what we look for. If we can find a company with 50% gross margin, I think that's a good company to, dig into. Net income was 1.9 billion. Net bookings in Q2 was 4.5 billion, of which 1.6 billion was EUV. That's a specific type that of machine that they sell. They have the DUV and the EUV. They expect Q3 to net sales between 6.5 and 7 billion. So same expectations from second quarter. Third quarter is the same, 6.5 to 7. Again, expecting gross margins of around 50%. They're expecting 2023 net sales growth towards 30% compared to 2022. One thing that we left off on the right side is their earnings were pegged at $4.98 per share, indicating a 32% growth. We didn't, it's not on this page, but next page here, they ended up getting $5.41. So they beat tremendously there. 43 cents. I guess they've beaten before, but this is nothing new. If we look at the very bottom, that shows the surprise percentage. They generally do beat by about 8%. Last quarter they beat by 20%, 21%, but so that's good. We expected them to beat that, and they beat by exactly what we would have projected, by about 8 to 9%. Again, looking forward, it looks like earnings, they're projecting 5.07. Does it mention that? It doesn't mention earnings, but revenue. Analysts are projecting 7.38 billion. ASML is projecting 6.5 to 7. So right off the bat, they're probably going to lose to expectations. Otherwise, this number right here, highlighted, that needs to get pulled down tremendously. Current year earnings, that's probably a little high, especially considering they just pulled, what was it, 6.9 billion. Whoops. And they may do that again. Yeah, so this is probably a little too high. We'll see how that plays out, especially considering they're still in an uptrend. We'll see if that gets revised down. The fact that this got updated, that means this, and when I say updated, if we would have picked this before, about a week ago, this first column here, that would have showed prior quarter, but they already updated this. So probably gonna miss on these. Unless these get updated, they're gonna miss those definitely, unless something good happens, of course. Something else here, we have interim dividend of $1.45 per ordinary share will be made payable on the 10th. So if we own this, which we do, we'll get a dividend on this. Second quarter, they purchased $500 million worth of shares. That's helping them out a lot. They keep buying their shares back, which means there's less out there, which drives the price up. And then before we move on, we have they're not expecting any significant impact from further U.S. export rules. We're going to go over that more, but that was just mentioned during their earnings, so I wanted to mention it now. Again, we'll touch on that a little more when we get to the news segment. But sticking with the financial statement, so we pretty much covered this. Again, probably going to miss on these in terms of revenue for the current quarter and probably the current year even. And when I say miss, I don't mean it's going to be drastic, at least not so far. But based on what they're saying, they might miss the current year maybe by $1 billion. I don't know. We'll see how. We still have a whole half of the year, so we will see how this all unfolds, but that's kind of the sense that I'm getting now. In terms of earnings, though, earnings per share, uh, this is all in line. Even the current year, we can look back and see the first two quarters they made about $11. So they're actually a little bit ahead of the average for earnings. It's just the revenue they might miss. So, you win one, but you lose the other. Again, looking out to the third quarter, again they're projecting 6.5 to 7 billion with this IBM sales of 1.4. Oh, something else. Uh, you know what? These actually might be okay numbers now that I think about it, because these are in euros and this is probably in US dollars. So they actually might be on pace. So we'll see, of course, but they actually might be good because euros are more than dollars right now. Um, but keeping on here, we have expected net sales growth towards 30% with a slight improvement in gross margins. So they're looking to push their gross margins even higher than the current like 51%. That's great. Consolidated statement of operation. So what I like about ASML is they actually have their uh, percentages. So we can look back in the past year and a quarter. We have the highlighted quarter on the far right. Net sales continually going up, not by much, but it's still building. So most recently it went up another $200 million, rough or 150 million, I'd say. And this time last year, I mean, it went up 1.5 billion. So very good. And then again, gross margin stayed within a range, I would say between 49 and 51. And right now it's at 51. It's actually on the high side. So very good gross margins for the quarter. R&D continues to grow. It's been flattened lately. The past two quarters, it's gone up about $50 million. Compared to last year, it's gone up about 210. So nothing crazy, but I'm sure percentage-wise, it's not the best. We also have operating income percentage. That's staying relatively flat within that range of 30 to 33. We're at closer to 33, so very good there. Net income percentage, 28%. Again, looking over the past year, they normally do between 26 and 29. Definitely towards the 29 side, and here they are at 28. So that's, they're meeting expectations there. Earnings per share, again, fine there. And then units sold. So again, I'm not sure if this is a good thing. It's just kind of how it is. But ASML, they make so much money off such a small amount of units sold. So down here we have in Q2, they sold 113, which is probably the best quarter they've had ever, I would imagine. 113. And I expect that to continue to grow, especially if other companies like Google and Apple want to create their own chips. I think that will continue to grow. As long as they can hit their gross margins, they should be fine. Net bookings, still way behind on that. Net bookings in 22 was averaging in like the 8,000 or the 8 billions. Right now we're in a slump. We have 4.5 billion. The thing is, they had so much in uh, their back pay or whatever. They had so many bookings in advance that this is actually okay. Because I don't think they could handle this many bookings, and that's how they got so much in backlog. But now things are slowing down. I think that's actually a good thing. It'll allow them to catch up, and as long as bookings still continue to come in, and like I said, I think they will pick up again. Maybe not to this pace, but maybe 7 billion, and then 7. We'll just follow it, but I think overall that's actually, it's not a bad thing. It's going to allow them to catch up. Moving on, they're projecting that they're going to reach annual revenue in 2025 between 30 and 40 billion, and that's euros. But if we go back, that's, again, if that's American dollars, I mean, 7. I mean, that shows growth. 40 would be crazy. If they go from where they are now to all of a sudden in 2.5 years, they're going to make $40 billion in revenue. That's tremendous because I think they're right around like 30. So if they can go up to there, that'd be great. They also think that they'll get to 54 to 56% gross margin. Again, they were at 51. And then 2030, they're saying they're going to go between 44 and 60 billion in euros. That's nuts. Gross margin 56 to 60. That's why we're going to keep watching this one. This and the other semiconductors probably till about 2030. Then I don't know. Maybe something else will pop up that's better, but yeah, this sector is really meant to grow. ASML seems like if these projections even come within like 90% of their guesses, these should be very good. Those are pretty large ranges. We'll see how it plays out, but very exciting to see those numbers. Again, we pointed these out before, these percentages in the middle. Gross margin 51%. I think that kind of gives us a comparison. And then the operating margin, you can see how much of the gross margin still comes down to operating. And then from operating to net income, not much at all. So whatever they make, a lot of it comes down to net income, especially compared to other companies. And then we're going to touch on this for the news part, but region sales for Q1 was 8% for China. I just want to point that out now. And for quarter 2, it was 24%. That's going to come up later. I guess just to kind of sum it up, sales are probably going to get cut in China. And to see that large of a percentage of sales going to China, that's it's very curious. But I do believe we mentioned before on the first slide that ASML does not expect significant impact from further U.S. export rules. That's not exactly the quote that I'm looking for, but again, we'll cover that as we go through the news. Here we just have cash flows. I didn't really like this one. If we look at net cash flow from operations, they're not bringing that much, especially this quarter, even last quarter, didn't bring that much. Have a decent amount of cash, a lot more than before. Cash and equivalents, again, that's up a lot. But cash from operations, that's not very good, especially if we look at last year where it was like 2.5 billion to now all of a sudden being only 385 million. Not sure what's happening there, but Not very good in that regard. Whoop. And then we also have the balance sheet, cash and equivalents. Again, that's decent. We really just highlighted these things. So we have the cash, uh, net accounts receivable, and then inventory. That all totals to be about $24 billion dollars, and then the current liabilities highlighted down here, 16 billion. So good current ratio. They should be fine. Uh, Inventories seems to be ticking up. Could just be the machines are valued higher. It's the same quantity. It's just they're valued higher. So it it's it's interesting to see, but unless we dig deeper, uh, I have to assume they have more in backlog, which is again okay because I think they're going to catch up here. Moving on, so now we can get into the news aspect. And so the Dutch are seeking, because that's where ASML is located, the Dutch is seeking to bar Chinese students from tech courses in this chip war. Uh, so this one didn't actually have to do that much with ASML, but I just thought that was very interesting that they're going to these lengths to prevent the country of China access into this type of technology, that they're going to ban students from learning certain types of courses because of this. Uh, Very interesting. Next, we have ASML to face new export restrictions to China as soon as June 30th. I believe that those have gone into effect, but we'll continue on. Again, the Dutch human rights body ASML may follow U.S. exports rules when hiring, and so we have highlighted here ASML and I believe other Netherlands companies, but focusing on ASML, they're going to be allowed to reject job applicants from Iran, Syria, Cuba, and North Korea who might have access to sensitive U.S. technology. I believe China's on that list. It wasn't mentioned, but based on the previous restrictions, I I think it just goes without saying. But these are other countries that ASML needs to be careful when working with, especially because of the relations with the U.S. that they have. Here we continue on that the Dutch are curbing chip equipment exports to China. They announced new restrictions on exports of some semiconductor equipment to China again. Uh, and so China responded here, and China is going to restrict export of chip making metals because of this clash we have. The two metals that are crucial to parts of the semiconductor and telecommunications and EV industries. And then just a quick snippet, we have gallium and germanium, along with their chemical compounds, will be subject to export controls meant to protect Chinese national security starting August 1st. So, not sure how much of an impact. I believe the article went on to just discuss how those two metals are fairly common. It's just China already has the, the work sites in place to mine this stuff out of the earth. Other countries might not have it in terms of, a mining facility in place, but certainly other countries have these materials, these chemical compounds. It's just, again, China already has the mines set up for it. Overall, I don't think it'll be that big of an impact, but it's very early. We'll see if it does later on. ASML faces tighter Dutch restrictions on servicing chip equipment in China. So this is just, again, a reiteration, but it's even tighter now. So Dutch expect control rules will forbid ASML from maintaining, repairing, and providing spare parts for controlled equipment with without government approval. In addition to the Dutch controls, the U.S. is expected to bar ASML from selling even older DUV lithography gear to about half a dozen of Chinese plants without approval from Washington. Very interesting. The U.S. is really working this team. I think this just goes to show how much the Dutch have leaned on the U.S., that the U.S. can kind of uh, orchestrate this type of control over something. Uh, Overall, it seems like it clearly this must be good for U.S., but to ASML, it just has me wondering because again, if we look back to that one slide, uh, China was making up, and I can just flip back real quick. This past quarter, China was making up 24% of sales. So uh, they're saying it's not going to be that big of a deal for them. We'll see what happens going forward because now these restrictions are going to come in place. Again, I think it'll probably take a quarter or two to actually get realized. But if we don't see an impact on this quarter or the following quarter, it'll probably be like ASML says, that it's just fine. No worries there. Uh, and then moving on, this last article before we pivot into the technicals. So chip CEOs to meet. Again, we had Intel, NVIDIA, and Qualcomm companies have lobbied forcefully against the new curbs. Qualcomm gets more than 60% of its revenue from the China region. Intel counts the nation as its biggest sales region, with China providing about a quarter of its sales, and NVIDIA, China provides about a fifth of the revenue. So I guess if we just look at those, Qualcomm might want to be nervous. Intel, that's definitely a good chunk, but not the biggest concern. NVIDIA, a fifth. It's not as reliant on that area, that region, but that's 20%. That's a pretty big chunk. Again, this is different from ASML, but it all kind of flows together within that chip market. It came up, so I just wanted to bring it up. At this point, though, let's pivot into the technical analysis. So again, the last time, whoops, let me pull that back up. So the last time we looked at them was on June 12th. If we find that here, that's right around Monday. Is that right? 6/12. So it's probably about the end of this one. Either way, it's about this. So 7/15, that was the last time we saw it. Since then, it's pretty much just gone up and down, and here we are at 7/18. Not much has changed. We had buy points at 6/13 and 7/24. 6/13 is this blue line. The top blue line, we noted that just because it kind of was consolidating between about 6/13 and 6/67. 6/13 was the bottom, so we marked that. And then 7/24, that was looking at the bottom of the uptrend, but pushing it out. Or no. What? Why did I mark this red? Interesting. I might have mislabeled this one. I guess I was putting more weight on 6/13. Yeah, clearly I was putting more weight on 6/13. So what I'm referring to is going back here. ASML, we have red, meaning I wasn't interested in picking this one up. But we had that buy point at 7/24, and the fact that it was at 7/15, a part of me thought I would maybe make it green or blue, blue being fair value, green meaning good time to buy. But we have 6/13 in bold, meaning that was the figure we were looking at. So we'll see if this needs to be updated at all. Most likely it will. Let's just skip up to the note that we left. We had an uptrend since November of 22. So that is the beginning of the purple lines. There's still an uptrend. It's just, I think, what we need to do here is we guessed too aggressively, I think is the right word. So I'm just going to scale it back because the original uptrend was hitting this bottom, and so we were dipping below a little bit more, and then we had the top of the trend hitting for the first two peaks when it seems to be flattening out. So I'm just going to, let me get this. I'm just going to pull it down to kind of match more so what it's currently doing. Again, keeping it parallel. I want to kind of pull this in. I'm going to pull it down just a little bit. That looks okay. So we see this uptrend. I just, again, I kind of squeezed it in to more so match what it's doing. And if anything, I can definitely pull this up to like that. Maybe that's probably best. So right off the bat, we're at the bottom of that uptrend, but that uptrend's still intact. So we can leave that note there. Possibly buy dips if it pulls back far enough. So it's definitely at the bottom of the channel. So assuming this uptrend is going to carry forward, I kind of like this one. The fact that it's been fairly flat, I also think that's kind of positive for this. Looking more long term, and especially based on the projections, I kind of like this one. What other notes do we have? Possible buy dips. Yep. I guess we can just update that to, I'm just going to update it to buy dips as the note. We also have Q1 bookings were down 41%. I'm sure that was true, but not really impacting us now. Bookings again were down, but I believe that's, again, they kind of overbooked last year and now they're kind of catching up. So the bookings are just, everyone already made their bookings. They don't need to book more. They didn't even get their orders yet, you know? And then the last note that we have for ourselves is we're looking for a PE ratio of 27 or less. And so I do have their chart up here. Their chart is at 34. So it's actually a little bit higher than we would like. It's not out of the realm of reasonable, but I wish it was lower, even like 30%. And while we're here, I also came across someone did a intrinsic value calculation. So now this is a little funky here because it's in euros. So currently 617, that is about 680. This was done last week, so not too long ago. I think it was done on like Wednesday night because the stock price was right around 680. And or I'm sorry, 617 slash 680. They're saying that a fair value for this one would be 504. That's like 556. So they believe that this stock is way overvalued based on intrinsic value. If we just look ahead, there, does it show how much it goes up? 8%, 6%. So I think they're free cash. Oh, the free cash flow. Okay. I thought it would show what the revenue, what they thought the revenue would be. Okay. So I don't have enough to check this right now. We'll see if that's true. It's okay to overpay for some, but that's kind of a big gap to say 556, and we're now at like 715. But I guess I'm willing to risk it. Let's just go back here. So again, let's just keep updating the chart here. Currently, it's at 718, so it went up $3. Buy points for me on this one. The fact that it seems to be consolidating right around, looks like 693. I'm just going to put in a point here. This looks like the next like step, I guess. It's still within that trend. It kind of broke it, pulled back in. Ideally, I guess I would say like 693 would be, or 696 would kind of be that buy point. So it was 613. What's happening here? So it was 613, which is this middle blue line. We've continued that uptrend. We have consolidated a little bit, so now 696, but that might be a little bit low, but 696 is in play. I'm just going to update 613 to 696. And then 724. If I look at this, the bottom of this uptrend is at 712. And then if I fast forward to the end of the month, we're looking at about 748. So if it's below that, that's kind of good. But for now, I'm just going to update it to 713. So buy point of 713. The number we're looking at, I guess for now, 696 is the number. But because we're at the bottom of the channel, you know what? Both of these numbers are good. I'm going to go with, hang on. So I'm going to make 713 the figure I'm most interested in. And the fact that we're at 718, I actually like this one. I'm probably going to pick it up. Resistance points, we had 667. So again, we saw some hesitation at 667. It hit its head there once, twice. Ultimately, it went through. And I think that was just, that was probably the right thing for it to do. We shifted our uptrend down a little bit, and that kind of gave us a better range, where before we were pricing in just the first top and bottom. But now that we've seen a topping and bottoming a couple times, we just had to flatten it out a little bit. And I think we're in good shape here going forward. So resistance today, I think we're past 667. Right now, apparently, right around here, whoops, right around in this range, for whatever, 746 roughly, that is a point of kind of concern. Not too much. I think it was just overpriced in the moment. But as long as this uptrend continues, not too worried about that. But 746, it pulled back after the earnings, so it didn't like it as much. Very interesting, because it seemed good to me. It didn't blow me away, but you know, it was good. So we'll see. I don't think that point will really hold it up that much. So 667, I'm gonna remove that. Honestly, at this point, I don't really see a resistance point until like 846 or 862. I mean, this black line. And I'm gonna pull that down just a little bit, down to 855. So I guess for now, I'm just gonna update 667 to be 746, and then we have 855. I'm gonna update that. We're gonna put in today's date. Anything else here? The resistance point that I'm most interested in is that 746. Very curious though to see that one author say that he thinks this one should be at like 550. So 550, that's way down here. That's in between these first blue lines. I'm gonna put this one, I'm gonna make this a green line. This is a green line. Okay. And I guess the last thing I'll do here is where do I think this one's gonna be at the end of the third quarter? Probably somewhere here, I would imagine. I'm gonna make that gray. I will say this is where I thought it would end up. Clearly that's way off now. So I'm just gonna drag this up. And at this point, this is where it's heading. Again, I'm gonna put it at the bottom of the channel and slightly below, just because that's kind of the pace it's on. But yeah, that pretty much sums this up. Yeah, so that's it. Just a quick recap here. So I have ASML. Currently they're at 718. My buy points are 696 and 713. It's very close to 713. So chances are I'm gonna pick up at least a share of this next available trading day. Resistance at 746 and 855. 746 again. I feel like there might be a little bit of a stalling or a flattening out there. But if not, then that uptrend is going to keep going off. And if that's the case, then not until 855 would I really start to worry about this one. Earnings came out, so we can check that off. And then the note that uptrend since November of 22, we did flatten it out a little bit, but it's still intact. We're currently at the bottom of that uptrend range. I'm saying buy the dips. And then we're seeking a PE ratio of 27 or less. It's currently at, I believe, 34. So it's not great. It's not too far away either. But overall, we're just going to lean into that uptrend. It's at the bottom of that range. It's been sideways consolidating for a while. I'd be okay with picking this one up. Let me see one thing. Yeah, I mean, if it wants to trade sideways, it's kind of traded sideways. Narrow gap for a few months now. Let me do this. For a few months now, actually, it's been between. Yeah, for 2 months, it's been trading between 696 and 746. It has stayed within that uptrend range. So I think this week is probably going to really give us an idea of what this one's going to do. I think overall, even in both instances, if we're going with the uptrend as the more dominant trend, then it's a great spot to buy. If we're going with the sideways consolidation that it's been doing for the past 2 months, it's in the middle. It's just barely on the buy side half, but it's really right in the middle. So it's fair, if anything. Again, the long-term uptrend, or that the uptrend's been in play longer. Therefore, I'm going to give it a little more priority here. And that's why I'm marking it green as a buy for me. But let me know what your thoughts are, where you would be looking to buy, or just what your strategy on this one is. If you have any questions, by all means, let me know in the comments. Or if you just want to add any insights that you've come across, feel free to do that too. Otherwise, that's it. So please like, subscribe, and I'll see you on the next one. Bye.